Sonia Gallen Komenica here. SoniaGallenKomenica.com is my website for anybody who needs to schedule time in addition to this live video to speak with me. And you can reach me at 833-369-7111 if you have any questions. Again, Sonia Gallen Komenica. Great to be with you all here today talking about life insurance. I have many people that I speak with. I go and I speak around the country about life insurance products, but sometimes people are not sure what exactly do you need life insurance for? When do you need it? Why do you need it? Is one product better than the other? What are the types? Wait a minute, I'm seeing $30 on television for $1 million policy. Well, you know, some things can be exaggerated. Let's just put it that way. But let's get down to the basics. It's going to be a basic overview today of life insurance, why you need it, when you need it, who it works for. Maybe sometimes you should hold off a little bit, but not for too long. Are there products that work for some people and not for others? Absolutely. There's a whole spectrum. But life insurance has been around for a very long time. In fact, life insurance types have been around since the Romans, the annuities. And annuities are just structured payments. You see it a lot with, I guess the lottery is probably the best thing you can see. Any sort of settlement you get from your policy in the event of death, while you have a mortgage or you have a lot of and you want to make sure your family's taken care of in the event something happened to you, you use that. But the product that has been around for probably the longest is the whole life policy, was almost what everybody had up until just after the Great Depression. And then we came out, obviously, they had the 401k and all sorts of other things. But life insurance has always been around. It's always been a fantastic product for people. Despite what you might be hearing in the media from others, it is a fantastic product. Why is it a fantastic product? Because life insurance has tax benefits. Many times you can get it tax-free. You can pass it on to your heirs, to your estate, tax-free. So you decide you're going to get a policy for $100,000 from the life insurance company, and unfortunately you pass away for whatever reason, hopefully natural causes, and the insurance company will pay that to your family. No questions asked. Whoever your beneficiaries are, they will give it to them. No red tape. So that's always a good thing for your estate. The other thing is, and one of the things that I teach for single parents, is that a life insurance policy can really change your life. There's nothing like it. You go, and there's some health components, obviously. You speak with a life insurance agent, such as myself, Sonia Gallen Komenica, and we go over some basic things. We have to find out if you've had any major illnesses, any cancer, anything like that. You wouldn't want to have AIDS or anything, any major mental health issues, bipolar, things like that. Because when you have a major illness, it's going to limit the amount of time probably that you're either going to be functional, or the insurance company is going to have to pay it out a lot sooner than anticipated. So insurance companies are always looking at risk. It doesn't matter. It's still a great product. The other thing is, insurance, what this is, it can be used to cover your key people at your company for your business. So if you're a business owner and there's two of you, maybe you're a partnership, a law firm or whatever, and somebody passes away, that is going to significantly affect the company. What if you're a one-man operation in construction or landscaping or something, and you pass away? What about all the employees that are depending on you? So there's so many things that it does. In addition, life insurance is great to pass on to your family as well. You want to have your family covered. Something could happen to anybody. And so you want to just have something in place to protect them. So what are these different life insurance policies, and which one works best? Well, we have the temporary one you see on television, $30 a month, $10 a month for $1 million policy. If the insurance company was allowing $30 per month for $1 million policy, and they were actually getting paid out, the insurance companies would go bankrupt, okay? So just know, when you get a policy that low, a temporary policy, the chances of you ever using it are like slim to none, okay? But the reality is, some people do pass away. There is risk. They have people underwriting has people looking to see when they could possibly pass away, when they won't. I mean, there'll be a certain number, but everyone's not going to pass away. So the temporary policy is smaller, lower for a period of time, sometimes like 10 years, 20 years, 30 years. But when you try to renew that policy after that time frame has expired, they are extremely expensive. So just keep that in mind. Another policy is the high cash value life insurance policy, which I talk about a lot. And those policies have cash built into them, and they have insurance. So the insurance is what's going to be paid off to your family in the event of your death. But the cash you can use for almost anything, from buying a car to buying a home to down payments to creating your business. A lot of people use it for their businesses. So there's a lot of different components. After the high cash value life insurance, or whole life insurance that we talk about, there's other variations of that. There's universal life, which allows you flexible payments and things. It is a little bit harder to build up, and you have to pay the targeted amount, or you're not going to have the money in your policy that you're expecting. The other thing is an index universal life policy. This is an insurance policy like whole life, where it has the cash bucket and it has the insurance, but it's tied sort of to the stock market without any losses. So you might receive a certain amount, an annual interest rate, but it won't be the full amount. In exchange for that, there's no losses. So the insurance company allows you just kind of this flexibility with index universal life policies as well. These do require time to really they're perfect if you don't need it, because if you try to withdraw money from it, they're going to be surrender charges on those. So those, you want to kind of make sure you have enough of other savings, other resources, and that you don't need the money. And that can be a wonderful, wonderful tool, especially for children. Then there's variable life. Now, variable life, if somebody wants to play a little poker game or something, or gamble a little, because you can get excellent returns, but you also can have extreme loss, or you don't need the money to live on, and you can risk losing all of it. Otherwise, I typically talk about high cash value life insurance. If you just want a basic policy just to cover your family in the event, while you have a mortgage, then just probably a term life policy is perfect. And there are policies for people who do have diseases that can't be covered in a normal high cash value life insurance. So those policies are available. There are companies like Gerber, more and more companies too. And one of the things I tell people that, or later, you will still have dividends at the time, but you definitely want to have something, and you want to have it structured properly so that you have what's called paid up additions. So the paid up additions is what goes into the cash side of the policy. The other side is the insurance, but you want the majority of your money to go into these paid up additions because you want to have access to the cash. Why? Because it gives you flexibility. It gives you chances to participate in opportunities, because sometimes people save, they want to put in 401ks, things they cannot access, and they forget when you do that, you're risking out on opportunities. What if a business becomes available? What if your family members, your parents become ill and you need to buy their house and you don't have any funds for it? So these are called opportunity costs. You want to have access to resources and access to things that don't have high tax implication, that are tax-free ideally. Because when you're putting money into something like a 401k and then you need the money, you're going to be penalized for withdrawing the money, and you can't continue to contribute until you... The other thing is, as I mentioned in one of my other videos, that if you're an immigrant, there's also policies for you as well. At least if you have a social security number or the PIN, find out what your expenses are, what any health challenges you might have had. I mean, there are many things they do cover. You can have health challenge with diabetes. You can have a challenge that happened 5-10 years ago, and that's totally different. Typically, you don't want to have a felony, but I think there's a grace period, like 5 years, whatever, after that, then they're willing to work with you. So the life insurance companies have been around for hundreds. Have an amazing day. Thank you so much.